Business of Property podcast. I'm Simon, and I've been investing in property for over 20 years. And if you're an active landlord or planning your next property investment, this podcast is for you. This week is another exciting Making Tax Digital episode. But don't switch off. I'm answering the big question this week. What will your property accounts process actually be under Making Tax Digital? And the big question that I have heard multiple times recently, do you have to complete 5 tax returns every year? Well, before we get to that excitement, I am going to start with a little bit of the boring, which is firstly just to let you know or to recap on who's affected by Making Tax Digital. I'm assuming that you are a landlord because this is a property podcast. So I'm going to be focusing on who is affected in property as a landlord. I'm sorry if you've heard me go over this before. I have done that on some past episodes. I will try to be quick, and you can always skip ahead a minute or so if you need to. Making Tax Digital for income tax will affect landlords and people with sole tradership businesses. If your combined income, not profit, income across property and sole trading is £50,000 or more, then you must act before April 2026. Income over £30,000 is covered from April 2027. And then the year after, we drop down to just income over £20,000 being included from April 2028. Limited companies and property held in limited companies is not part of this. This is all about property owned in personal names, covering property income and tax that you previously declared on your annual tax return in the SA 105 property pages. With that covered, let's think about accounting processes for a property portfolio. I'm thinking specifically about small and maybe medium-sized portfolios here. Larger property businesses will already need more frequent bookkeeping and accounts than I'm going to sort of expect the small and medium-sized people to be doing. Small to medium landlords, especially those with a portfolio full of simple buy-to-let property, could have a current process that's roughly having a box for receipts during the tax year, maybe invoices as well, or maybe you have a file or folder, shall I say, on your computer that you chuck all of those in when they're electronic. And then at the end of the tax year, you pick up the box or the electronic folder and you find your bank statements, be they bits of paper or again, some PDFs on your computer. Then you sit down for a few hours or perhaps a day or two, depending on how big your portfolio is and how much work you've been doing on it that year, and add it all up into the various tax categories. You probably use a spreadsheet for this, but I do know some people still use paper and a calculator. So that is definitely a thing that is out there still. Quite a lot of people don't add things up at all. Instead, they take their box or computer folder and the bank statements and they just send it all off to their lucky accountant, who then adds it all up for them. With everything added up, you then copy those numbers into your SA 105 page as you're filling in your tax return, probably online. So again, paper is still possible, but most likely on the HMRC website online. You fill in your rental income and each of the expense categories and possibly some of the other adjustments that are within the property pages. That's all one page of your tax return completed. Then either you or your accountant carries on and completes all the rest of your tax return before submitting it to HMRC. So we've got the property page, which is all about your property portfolio. And then you've got all of the rest of your tax return, which is often quite a lot, talking about PAYE if you still earn that, or dividend income if you've got a limited company, or it could be savings income, sort of interest, or all sorts of other things might be included on that. So if this is you, you're probably thinking that Making Tax Digital is going to be pretty terrible because you've now got 5 tax returns to do each year instead of 1. Not only that, but you may not be allowed to use your spreadsheet, and definitely not your calculator and paper. And to cap it all off, you'll have to actually think about this every single quarter, whereas you could ignore it for a whole 12 months previously. You've now got to think about it just so much more often. Or if you're in the category of people who prefer to send a box to your accountant and you then need to start doing that every quarter, I suspect your accountant may start charging you more as well, which is probably something you're also not looking forward to. I'm going to propose a different approach, a different process. You may feel I'm trying to move your cheese, and you'd really just rather I didn't, because you like how things are, you know how they work, you're happy with them. But I'm a big fan of working efficiently and optimizing processes whenever we can. And that does mean adapting and changing and finding the new place for the cheese. I'd like to suggest that this new process might, just might, work better for you if you give it a chance. I'm going to use PATMA Property Manager as the example Making Tax Digital software in this process that I describe. But other Making Tax Digital software is available, and I'll link to the HMRC software choices page in the show notes, which lists all of the options that are currently available, and there are more being added to that all the time as software developers finish getting their software ready. But it's PATMA that I know and that I understand and that I can be confident actually covers these things, as obviously I've helped to design the work and to make sure that it is working as efficiently as possible for people who are using it. Hence, that will be the example I'm going with. So, to get started, you enter some basic property and tenancy details. And we're looking here at the beginning, or perhaps even a bit before the tax year starts. So this could be perhaps in February 2026. It could also be now if you want to get ahead of the game, but let's say February next year. And you just enter the bare minimum. So it doesn't take very long to enter each of these details for each of these properties and each of these tenancies. It does take a few minutes, but it's not that long, and you probably got these details to hand relatively easily. You don't have to fill in a whole heap of stuff. You can just put in the basics. Next up, we add open banking connections to the 1 or maybe 2 bank accounts that we use for our property income and expenses. This imports a list of your transactions. These will then also update automatically over time. Now, you just carry on running your properties. When you get a receipt or an invoice, you take a photo and upload it straight to PATMA, which you can use on your phone, either in the app or in a web browser. If an invoice arrives by email, you just forward the email to your unique PATMA address, and PATMA will keep a hold of that for you to look at and process later. When your tenants pay rent with their specific bank reference, hopefully, PATMA will notice, and it will email you to tell you that rent has been paid. When you're ready, at least once a quarter, because that is what HMRC are forcing you to do, to think about this at least once a quarter. But it could be more often. If you want to stay on top of things, you might do this every month or so, just to make sure that your tenants are up to date and everything is in the correct place and ticking over. You log into PATMA and review all your remaining bank transactions, linking to the receipts and invoices you've saved earlier into PATMA. They'll all be there ready and waiting for you. Regular expenses, you can set up and just record those as well, so your mortgage expenses and things like that. And this is basically the same process that you would do at the end of the year when you're going through your bank statements line by line and your box of receipts and making sure that they match up and there's none missing and things like that. You're just doing this every quarter. It's the same thing, and you're doing it digitally. So it's a little bit streamlined, a little bit more efficient, because you can make use of the open banking feed. You can make use of the receipts and invoices having already been saved into the system. And furthermore, the receipts and invoices aren't 12 months old when you look at them. You took the photo just a few weeks or maybe a couple of months ago. The photo wasn't faded or anything like that, hasn't deteriorated in the sunshine where the box has been sitting. So you can still read it. You still know what it is. You can still remember it. It's much easier to actually complete those details and allocate things to the right tax categories. It is ultimately exactly the same work you already had to do, just with that extra automation help. There's no extra work here. Hopefully, that same work can be done faster and more efficiently as well. And you are shifting it, admittedly, from that 1 or 2 days at the end of the year every 12 months and splitting it up into needing to be done at least every 3 months. But it's the same work. It's not anything extra. Having done all the adding up, or rather, providing the details, so PATMA can do the adding up for you, you do then need to send the totals to HMRC. This is the quarterly submission part of Making Tax Digital. And in PATMA, that's just 2 extra clicks. Plus, hopefully, a quick look at the numbers to check you're happy with them. So you open the report, you check through the numbers, and then you just click to confirm and click to submit them to HMRC. Or, if you're wanting your accountant to do that part, you can pass that baton over to your accountant and they can log in and send the numbers for you. But the numbers will already be there for them. Maybe they won't even charge you too much extra. Maybe even they'll charge you a bit less because they won't have to go through and process all of that box of receipts. Another option is you could have a bookkeeper who does that element for you, this regular processing of the actual transactions and making sure that all the details are up to date. This obviously continues during the year because there are 4 quarters during the year. They happen every 3 months and you have to do this every 3 months. Again, it isn't extra stuff apart from the couple of clicks at the end, which is something new, but it shouldn't really be extra time because you're already saving a bit of time through the automation and efficiency help of the software before you get to those clicks. So as you go through the year, you continue to collect and save receipts and invoices as they happen, putting them straight into the system for processing later on. Some things are happening automatically, like telling you about rent receipts and being recorded as rental income for you. And then you do have those quick reviews of the other transactions, the bits and pieces that are not done automatically, which is just the same as you had before. You have to do this and make these submissions at least in July, October, January, and the following April. From April, you, or maybe your accountant, can also submit any of the other figures and adjustments from the SA 105 page. In actual fact, strictly speaking, you could do this earlier in the year, but it probably wouldn't make sense to, so I'm going to stick with this for from April. Consider this like filling in those other fields on that page of the current tax return. The core figures are already done. You've filled those in your quarterly submissions. You don't have to look at them again. There isn't any repetition here. They are already submitted. It's the other fields that need to be filled in, and then that's your SA 105 page complete. Just like in the existing tax return, you have to fill in that SA 105 page at some point. And you have now done that. You haven't really added anything extra. Yes, you did have to think about your property accounts 3 extra times during the year. Yes, you did have 6-ish extra clicks during the year, spread across July, October, and January. You may have also saved time, though, thanks to transactions being recorded automatically and other ones being streamlined in how you record them. Of course, it is different. It is a different process. You can't do these things with a calculator and paper. You also can't do them all with a spreadsheet. It may also have a small cost. For completeness, I will include PATMA's costs in a moment, just so you're aware of one example. But first, I want to finish the new Making Tax Digital process. You've got as far as completing the SA 105 page, completing your property page within the tax return. So naturally, you still need to complete the rest of your tax return. There isn't anything extra involved in this. It's the same information, entered in the same way or very similar way. I suspect it'll look a little bit different, but it's basically the same. That the software will be different, but it's the same information. There's no extra work, and you still get to think about those elements just once a year. If you've got an accountant who does it for you, that's also still the same. The SA 105 page is already done and doesn't need to be repeated. It's just the extra bits. So, in conclusion, do you have 5 tax returns to complete under Making Tax Digital? No, I don't think so. Will you have to think about your property accounts at least 4 times a year? Yes, and I do appreciate that's not very appealing. Will it be a big change? Possibly, if you're currently used to paper, and a little bit if you're used to spreadsheets. Will it be lots of extra work after you've made the change? No, I think it will be less. The automation and other efficiency gains should more than cover a few extra clicks required by HMRC. Should you be worried about learning a new system? Hopefully not. PATMA will be running free training courses to help people get started with using PATMA to record all of their property portfolio details, but especially to cover the Making Tax Digital elements of it. We don't have any dates yet, but if you'd like to be first on the list, please do email support@patma.co.uk and we'll make sure that gets sorted out for you. So just to finish up, the pricing details for PATMA Property Manager, which I said I would include. Property Manager is free if you only have a single buy-to-let property, but I'm afraid that is a little limited in so much as it doesn't include the open banking automations, because the open banking facilities do have a cost for PATMA as a business, hence we really just can't offer that for free. Property Manager Pro, which is the paid version, starts at £15 per month and includes the first 5 buy-to-let properties, or the first 5 rental units if your properties are multi-unit properties. With all the automations included, I'm fairly confident that will save you at least £15 worth of time. There will be a link in the show notes for more details if you want to find out more, and to PATMA's page specifically about Making Tax Digital as well if you want to learn a bit more about how that works within PATMA. I think my overriding message that I really want to encourage everyone to believe today is to not be afraid of Making Tax Digital. Change is always hassle and annoying and not something many people really look forward to or enjoy. But ultimately, once we get over that change, I think that what Making Tax Digital is forcing upon landlords and the property profession will ultimately improve efficiency and reduce the amount of time that you have to spend on your property accounts. And if you're unsure or need extra guidance, PATMA can help you through that process and through that change, hopefully leaving you and your property business running more efficiently on the other side. Thank you for lending me your ears this week, and I will speak to you again next time.